Senior Vice President, Business and Economic Research with Axis Bank. Saugata, thanks very much for your time. Good to have you here.
Pleasure as always.
Tomorrow is the RBI meeting. If you were at that meeting after the decision is announced and you were allowed to ask two questions, what would those two questions be to the governor?
Any room for further rate cuts? That's obviously one. And
which assumes a rate cut tomorrow or?
No.
No. Okay,
I think the bulk of probability is that, I mean, you can never say never with a central bank. But the bulk of the vast probability, I think, tomorrow is for a pause.
Okay.
There are too many uncertainties in the system.
Okay.
The second issue, I think, is, for one, I mean, the other things that, I mean, it's not so much a question as an issue. The timeline for the formation of the Monetary Policy Committee. So that's one. And obviously, I mean, how things might change in terms of the monetary policy process. If the policy, if the committee were to come in place. I think the other major question that remains now is something that we are all waiting to see, other than any potential change in the RBI's forecast of inflation, particularly inflation growth. The new trade-off between inflation and growth is the RBI's view on liquidity. How soon are they likely to compress the structural deficit into a structurally neutral zone? You saw the numbers on Friday. Liquidity is virtually, I mean, there's been virtually no borrowings from the RBI's LAF window. But that's, I think, more a couple of days with government balances coming back into the system and so on, with all the payrolls, paid days, etc. But how soon might the RBI think of squeezing the timeline? Initially, it was for a year. So I think that's a very important part when it relates to monetary policy transmitting into bank lending rates.
Okay. You've spoken like a true economist, Saugata. I was hoping that you'd touch upon the entire issue of Rajan's extension, which is the one thing you read at least 3 articles about, right? I mean, each day.
Nobody really knows. Nobody really knows. I mean, so it's futile to speculate on that.
But I'm sure you'd hear at least 5 questions on that tomorrow. I don't know what he's going to say, but it's going to be a big one when he starts to address and take questions from members of the press. So tomorrow, no cuts at all, right? I mean, nothing, no change, no other change.
Probably. Now, I mean, remember, I'm again spoken like a true economist. I'm keeping a little window open because right now, I mean, with the IMD's revised, updated forecast on the rains, with a 0% probability of a deficit rains according to their predictions. It's still too uncertain. I mean, the effects of global climate change, I mean, you could, till the last moment, you could predict good rainfall and something happens. So I think there's still that uncertainty. Besides which, I think a Fed rate hike this summer is pretty much off the table. So if with these two events happening, I'm not closing off the chances, but my sense is, if you were with a gun pointed to the head with the probability numbers, I would think about a 95% chance of a hold tomorrow.
Fair enough. By the way, the jobs number out of the US was a shocker on Friday.
Yes.
Expected addition was 150,000, and this was what, 40,000 or 38,000,
yes,
right?
Yes. So I mean, just add about that does because I mean it shows that there's still some weakness. We don't really understand. I mean, what happened? Added to the 30,000 is another about 35,000 because of a labor strike in the month. I mean, the way that the question is polled, I mean, that would have taken that into account. But even that, I mean, 35 added to the 38,000 is still way weaker than whatever numbers there are. Together with this, I think there's been a significant outflow from the labor force. The labor participation rate has come down by 2 basis points. So even that is a cause for worry that people might have stopped looking for employment and things. So this number really came in as a very major surprise.
Yeah, absolutely. You know, moving on to our own sort of job situation, Saugata, and I was doing a bit of research on this over the last couple of days. The Labour Department publishes a quarterly survey of jobs, and the data for 2015 shows the lowest pace of additions since they started collecting the data, which is right after the financial crisis. Right. The NSSO survey happens once every 5 years.
2. There's a thin survey that happens every 2 years, and there's a large survey every 5 years.
The last survey was 11-12, but that was out of term.
If I remember correctly, yes, you're right.
Yeah. So, you know, that's pretty poor. CMI, by the way, also publishes unemployment rate, and they started doing this from January 2016. The graphics are on your screen, and we'll put out the Labour Department numbers as well in a bit. Big jump in unemployment, and this is, I mean, their sample size was pretty large. I mean, 150 odd thousand people is what they poll. What's your sense overall? I mean, any indications that you're getting?
The CMI numbers I will not comment because I don't know the parameters of the survey. The labour numbers are that you mentioned were started after the financial crisis. These are more export oriented. I mean, 8 or 9 sectors that were export dependent. That was the first motivation for putting these numbers out. And with exports, you know pretty much that, I mean, employment will not be jobs addition in the export sectors because there's very little demand for exports. I mean, the export numbers that you've seen. And there's probably not been too much of a diversion from the export market into the domestic market. Yeah. So I wouldn't be terribly surprised at the numbers that have come out. And 2015 is also, again, still fairly dated. So I'm not very sure. But overall, I think the sense definitely is that employment really has not picked up. I think there's been a huge amount of automation in the system. SME growth, which is likely to be the key driver of employment, has also not been very, very, very rapid and very fast. So I wouldn't be terribly surprised that employment numbers have not come in. I think to a certain extent last year, you had seen, last year meaning 2015, part of 2016, you had seen some employment being created by the electronics, e-commerce marketplaces, the startup culture and so on. But even there, with a lack of funding going into much of 2015 and lately of 2016, there's been significant layoffs, retrenchments in that segment.
I mean, actually, October to December, the last quarter for which the Labour Department survey was out, there were job losses, right?
So that's what I would think. I mean, there would be some correlation, although I'm not sure how much of this would be export dependent. I would have thought that there might have been some job losses in the IT segment, the ITES, although from the numbers that we are seeing, we don't know the net job additions because there's been some attrition, there's been some retrenchment, and there's been some hiring in the IT segment. So I'm not sure what the net number is. But I mean, this does not sound inconsistent with the economic environment that we have seen.
8% economic environment.
Well, 8% again. I mean, 7.9% part of that is the government. So 7.4. So 7.4 to 7.9 is what the government takes. So leave that out, 7.4. Can't really say. I mean, we are all battling. So companies are actually making profits. So shareholders in the companies are actually doing a little bit better than what they had been doing. But the other stakeholders, namely the employers in the companies, I don't think that the net incremental employment is doing as great as some of the other stakeholders.
I mean, in certain industries, non-linearity between revenue generated and number of people employed is actually beneficial for companies, right? I mean, you need to employ lesser number of people for the same amount of revenue. So shareholders benefit, companies do better.
I'm not very sure whether that's the optimal outcome, though, Prashant, because beyond a certain point.
I'm not saying that. I'm just saying that is how it works. I mean, we've seen this.
And that, in fact, is the key to explaining the 7.4% GDP growth. And which is the other worrying point that...
questions being raised about the GDP numbers as well, right? I mean, the private consumption growth, 130,000 crore increase over the last 1 year. I mean...
Yes.
And that's the only sector, by the way, which is added to, explains, everything else has taken away from growth.
The worst news is that it's not the consumption and the investment. I mean, there's been a fairly significant rise in the gap, the discrepancies. And I'm not sure what the story is on the discrepancies. So the discrepancies can be allocated either way. So once you get the revised numbers, once there are better estimates of consumption and investments coming in, the large discrepancy number can be diverted into, shifted into either the consumption or the investment. So at this point in time, it's still very unclear. I mean, there's no point in speculating, but it is disconcerting, the large increase in the discrepancies that have shown up. How much of the numbers that you're seeing of consumption growth, investment growth, can be taken as actual fact is something which is a cause for concern.
I mean, it is still the overall the debate refuses to go away. Is still again pretty. It's unsettling, right? I mean, to say the least.
It is. I agree with you that, I mean, I would, if there is one crib that I have with the Central Statistical Organization, I would have thought that they would have engaged stakeholders, the analyst community, the economist community, the media, for a more detailed analysis based on the MCA 21 database. Remember, I mean, the Q4 numbers that we have seen and the updated estimates for FY16 are actually not based on the MCA 21. It is based on the smaller set of companies that you and I track, as well as the IIP numbers and so on. But at some point in time, say the FY15 numbers and the numbers before, I would have really liked for the CSO to come in and engage using a more detailed cut of the MCA 21 on the basis of which these numbers are getting formed. I think there is a lot of truth. I mean, if you are looking from the GDP numbers, from a profit perspective, exactly what you said, that I mean, from a shareholder perspective, I think the numbers suggest that there is some truth to what is going on. The worrying part in this is that given the fact that input prices are beginning to creep up, we still do not seem to have adequate demand for adequate pricing power. In FY17, that is this current year, if you are looking at the profit metric for estimating the GDP, you will not get very rapid growth. I mean, growth is likely to be fast because profit compression, you have already beginning to see profit compression, and that will probably carry on through the rest of the year. So that is what is wondering. The only thing that will change now is if we get good rates.
This year should pick up a little bit, but margins should start to come under pressure. The exact opposite of what has happened so far.
Exactly. So volume growth should begin to pick up if the rains are good, but the profit growth, the margins, the operating margins or whatever margins are likely to shrink.
Anything else you'd like to throw some light on before I wrap up? Any other trends?
I think going back to your original point, I mean, on what are we looking for from the policy? I think it is very critical because at this point in time, when we are beginning to near the end of the rate easing cycle, I think it's important to get a sense of how much more room there might be to ease policy, and for that, I think we need a better estimate of what the RBI is thinking in terms of the inflation trajectory, because that is the key metric by which monetary policy will be decided. And I think that will be something which we will anticipate tomorrow.
By the way, what is your own thought on this entire Rajan extension debate?
No, I think, I mean, it's very difficult to get a sense of where this is. I think Governor had started on some major initiatives, policy initiatives, which will take some time to get filled. So it doesn't really matter, as Governor himself has mentioned. I mean, it is the institution, RBI, which is key. I think everybody is on board on this agenda, led by the Governor. So
there would be no debate, right?
The RBI. I'm talking of the RBI, the institution that the Governor is heading. Sure. Governor is heading. So that institution is on board, and given the fact that a lot of institutional capability has developed over the years, I would think that there would be a significant bit of continuity in the institution.
Policy, the RBI. Okay, fair enough. So thanks very much for your time. Great having you here. Appreciate you joining in, as always. Thank you.